That thumbnail that you just clicked on is not clickbait. I wish it was. My portfolio is down a lot. $15,330 to be exact. The cost of the lessons I've learned have been very expensive, but I think I finally have a better understanding of the stock market. I'm sharing this publicly so that way people can watch this and learn from my mistakes without having to have their portfolio do what mine did. I really hope that this video will be helpful for people who are just thinking about getting into the stock market or just did, or somebody who just wants to start their financial journey. So I really tried to pack it with as much valuable information as I could and things that I wish that I knew a few years ago. But before I tell you the truth that I learned about the stock market, I think it's important to share my journey with you thus far. The year is 2019. The world has no idea who Carole Baskin is or the last time that they had to wear a mask. I just graduated from college and I was broke. I was sitting there one day and I was like, man, I need to learn how to make more money. So I started looking it up. Every blog post and YouTube video I saw mentioned the stock market. I didn't know what it was at the time, but I figured there must be a reason it's so strongly correlated with rich people. I decided, I'm finally going to learn what the stock market is and how to make money from it. A little bit about my personality. When I get into something, I get obsessed. For 5 months, all I did during my free time was read books and articles and listen to YouTube video and podcasts about the stock market. And then in January of 2020, I finally did it. I got into the market with one share of Nintendo, a whopping $49. But it didn't stop there. I kept learning and obsessing. I started listening to company conference calls and reading their earnings reports. I eventually built out a portfolio of 14 companies that I would research on a weekly basis. I became super frugal and started investing every single spare dollar that I had. I was even a good little boy and avoided hype investments like AMC, GameStop, and Dogecoin. And at the time, I was making a lot of money. I thought I had figured it out. I continued this pattern for 2 years. And now here we are at present day, where technically you could say I did the opposite of my goal to make more money. I mean, you saw the thumbnail. So you're probably wondering, do I regret it? Absolutely not. I swear I have no regrets. And to be clear, I'm not rich. This is a ton of money to me. I have no regrets because had I not gone on this journey, I would not have gained an education that will last me the rest of my life. Sounds cheesy, I know. But I would rather have made these mistakes in my early 20s and then be financially educated for the rest of my life than have made these mistakes closer to retirement. Earlier, I shared my journey with you to highlight the fact that I did all of the work and everything you're supposed to do and somehow still ended up here. So what went wrong? The first thing I did was try picking individual stocks. Look, I wanted to be the cool guy who picked individual stocks and was able to find the next Tesla or whatever. But the truth is, I increased my risk substantially by investing in individual stocks, and I gave myself a lot more reward. I started skipping the reports and eventually got to the point where I would just read or watch other people's summaries of the reports, which feels like now you're relying on someone else's decision making, not your own. When this whole time, I could have greatly minimized risk and effort by investing in an index fund that simply tracks the S&P 500. For the beginners out there, an index fund is basically a professionally managed basket of stocks. The S&P 500 represents the largest 500 US companies. Very safe, very stable. For example, let's say I was going to invest $1,000 into Tesla. All of my eggs are in that one basket and I have to watch it very carefully. Higher risk, higher reward. But instead, if I put $1,000 into the S&P 500, my money is spread out between 500 baskets that will be managed for me. Literally set it and forget it. Another side note for the beginners, the S&P 500 performs so well that it is the benchmark stock pickers try to beat. So it's a really good option. And if you can't beat them, or you don't want to put in the effort to, just join them. The second major mistake was thinking in years, not decades. Whenever you start your financial journey, I promise you, you will already feel like you're behind. There's this popular saying in the investing world, the best time to invest was yesterday, the next best time is today. I took this as urgency to go and catch up to everybody, and I listened to it. I thought whenever I had spare money, I had to put it into the market ASAP. After all, the more money I got into the market to work for me, the better. Right? Sort of. You do make more money by having more money in the market, but the truth is that we have more time than people make it seem. You can pace yourself. It takes decades to build wealth, not years. Because I was thinking in years and not decades, I was going at a really fast pace. From this came two consequences. The first one is that I bought most of my shares at a higher price than they are today. Obviously, there's a lot going on in the world that does affect the stock market that's out of my control. And I'm sure no one could have predicted all the crazy shit that would continue to happen continuously after January 2021 I got in. But had I been more structured with my purchases, like I'm only going to invest X amount every week, no matter what's happening in the market, I would have had a better average cost on my positions. But instead, there was definitely some times where I was like, ooh, this price is a steal. So I went hoard, and then the price kept dropping. and dropping, and I had run out of cash, so I couldn't average down with it. The second consequence from going too fast was experiencing financial related anxiety. Since I felt this urgency to put all of my money in the stock market, I neglected my savings account. Luckily, I've never needed to actually sell my stocks to pay for anything and realize the loss. Final side note for you beginners, I technically haven't really lost this money until I sell my stocks. There's always the hope that they'll go back up. But either way, the possibility of some unforeseen circumstance happening, like my car needing work, or let's say I injure myself and then I have to sell my stocks to pay for that, was enough to make me anxious when the market would dip. At times, it got bad enough that it made me panic a little bit. And honestly, it's an anxiety that could have been avoided. In summary, invest in index funds, pace your purchases, and don't neglect your savings account. If you're someone who's just starting out their financial journey, but you're not sure where to start, a great place is learning how to save more money so that you actually have spare money to invest. Check out this video on how to do that. None of this has been financial advice and just my opinion. Thanks for watching.